Good afternoon, everyone. Today is Wednesday, the 8th day of May, 2013. Let's go over the results from the live trading room this morning. On gold, we were minus 8 ticks. On the Russell, we were plus 16 ticks. On crude oil, we were plus 5 ticks. And on soybeans, we were plus 6 ticks. I wanted to look at something here. Look at these soybeans. Man. I knew they were going to go down. There's another trade setting up here for you guys who are partners right now. You know what you're looking at. There's another trade setting up right here on the soybeans. The second leg is the leg that I usually like the most. This was the second leg that we got in on. The third leg was awesome this time. I don't know what the fourth leg is going to be like, though. Alright, the 6A and the 6E. I know you keep asking for that. You need to become a partner, and then you'll have your own stuff. But let's go over the spreadsheet. Okay, let me grab the spreadsheet and we'll look at that. Alright, today we were plus 9. Plus 9? Not plus 9. We were plus 6 on soybeans. We're plus 6 on soybeans, plus 16 on the Russell, plus 5 on crude oil, and minus 8 on gold. That's what our results were for the day today. It took us 101 minutes. That's a long time. But it took us 101 minutes to make our 2 points, 7 trades. We were at plus $130 a contract when we got there. We made a total of 8 trades is what I have. And we are, yeah, that's right. Yep, that's right. Total of 8 trades, and we ended the day plus $205 a contract or something like that. Our total on the month so far for the 6 days, 1, 2, 3, 4, 5, 6 days, is $1,472.50 a contract. If you apply $8 per turn commission, which is high, but if you apply that, we're up $920.50 per contract after fees. Okay, that's where we stand on the month of May. The month of April was our banner month so far. We were up $5,392.50. Okay, let's see. 14. Yeah, you were right about that, Kyle. The $14 soybeans. Man, it got rejected from that level. Got hammered down from that level. All right. If you have not taken a free trial with us, go to www.cfrn.net/apply and sign up for your free trial. With your free trial, you will be sent an email with a video in it. Watch the video. It shows you how to download the charting platform. It shows you how to download the indicators. If after you've done all that, you've downloaded the charting platform, you've downloaded the indicators, at that point, if you decide that you need more help with the indicators, or you just want to use my layout, just send me a quick email at support@cfrn.net, and I'll send you my layout. I'll send you my layout and a little video on how to import the layout. It's really pretty straightforward. All you have to do is import it, and your charts will look just like mine. It'll apply all the indicators for you. All right. If you have already taken a free trial with us, and you want to become a partner, and you want to know what it takes to become a partner, then send us a quick email at support@cfrn.net. If you're on the free trial and you didn't get the email, then again, send us a quick email at support@cfrn.net. You could always call me if you wanted to at 949-423-6464. 949-423-6464. You can always call me at that number, and I'll try to return the call to you as quickly as possible if I can't pick it up. Make sure you leave me a voicemail, though. All right. Let's see. Going over the markets now. I have soybeans up here. I'll show you the one trade we took on soybeans. Okay, we were watching soybeans in here, but it got all congested in here. All right, and there was no opportunity because we didn't have the divergence in the right place and all that. And I had drawn this shape on here, this wedge shape. I had drawn that on there when price was like right in here is when I drew that. And then it broke out of that, made a pretty nice move up, and then it came back down. And by the time it came down, I was watching it for an opportunity to get long on the way down. But by the time it got down, you see this. Paul, are you in here right now? Let me just take a look. And there's a lot of names to go through. Paul. Nope, he's not here. Anyway, it's being recorded, so I'll say it for his sake anyway. the cycle line had gotten down below the midpoint by the time it closed up. We had lost our divergence, so I wasn't interested in the trade anymore. Then the thing just collapsed. All right, and when it did, it came in here, and there was an opportunity to short it in here. We got short here, and it was right at the end of the morning session. So we were pretty aggressive with our risk management, and we ended up taking 6 ticks profit out of the trade. Okay, you see the thing kept moving down, and it really broke down right in here, but we didn't have an opportunity to trade it here. Over here, there might be an opportunity to trade it, but it's not here yet. All right, you would need it down closed below this trend line. This is the fourth leg. Those of you guys who are partners, who have been in the partners meetings, you know I like the second leg the most. The fourth leg, I don't know about that one. We'll have to see if it all comes together anyway. All right. All right. Let's see. I'm gonna jump over here to crude oil. We had a couple of trades on crude this morning, small trades that we took anyway. And there they are. Now, crude had some opportunity in here, I believe. The markets were kind of weird this morning with crude inventories coming out today. Really, my audio starting to do what Dwayne's was just doing? Oh, that's not good. That's not good. Okay, alright. Alright, good. Alright. Okay, well, I'm not going to move too much then. Alright, I'll only move my finger and my mouse. I have to move my eyes to see the other monitors. But we have right here, there was some opportunity here in the morning that I had missed. This was the pre-market. We were looking for opportunities here once the market opened up, looking for a down close below here with the bearish divergence. Looking for an up close above here with the bullish divergence. There was an up close. It gave 4 ticks. Would have been to break even on that. I highlighted this area, but I didn't do anything up here. I drew a trend line on that one. We never got a trade. Drew a trend line on this one. We did have a trade, but I missed it. I missed this in here too. This down close right here would have been a shorting opportunity. I missed that. I think I missed it because we had crude inventories coming out here at 10:30. Now the crude inventories came out, and you see right here between 10:30 and 10:31, they were just these bars. It's like 30 bars maybe. Usually when the crude inventories come out, you get like 100 bars in that minute, 100, 200 bars in 1 minute. It was unusual today, unusual the way it reacted. And the other markets reacted, well, somehow they all reacted. They all had some sort of reaction off the crude. What actually happened was the pile was smaller. There was the inventories were lower than anticipated. They were expecting 2.1 million, and I think they got 0.2 million. Usually when that happens, crude oil will, the price of crude will usually go in the direction that it should go with the supply and demand equation. Meaning if the supply is greater and the demand is less, the prices should go down. And if the supply is less and the demand is greater, the prices should go up. So we should have seen upward prices on crude today. Now the inventories came out over here. Right here, 96.20, right in that range is where the number came out. It dropped all the way down here first. All right, we didn't take any of those trades. We missed a trade right in here, and we got long right here, took a little bit of profit. It started to move up in the direction where it should have been going, but then it came back down. All right, it moved right back up to where it was, and then it started to come back down. We got short in here. We took a little bit of profit on that one. We missed a follow-up trade there. We missed a follow-up trade here. Then we're getting in toward the end of the morning session. Now, where's crude right now? It's still down about 20 cents from where the inventories came out. So it's just not reacting the way that it normally does. Now, I'm going to show you something in just a minute that I thought was unusual today. There were a couple more trades in here. All right, there was a trade here, a short trade there, a short trade there, a short trade right here for this big move down. This was a perfect trade right here. Okay. We had a bearish cross, pull away, test of the BBC, down close, bearish divergence. I mean, if you look at the picture, you would think that I made this picture from crude oil today, but I didn't. Step 1 is the cross, step 2 is the pull away, step 3 is the test of the BBC with a down close, step 4 is the bearish divergence with a red cycle. All right, that's textbook right there. And that was it. Now the other thing that I wanted to show you, I wanted to point out to you, was this morning something unusual happened right here. We had a big run up before the crude inventories came out. Usually when the crude inventories are going to come out, there's not really that much movement, that much range before the inventory numbers come out. Today they ran up before the inventory numbers came out. It was like it was built in. You know, the increase in price. You know how normally people will say things, well, a lot of times you'll hear people say that if there's a big news event coming out, like Bernanke's talking tomorrow, that may be built into the price already today on like the ES or the Dow. You know, if Bernanke is talking tomorrow, I don't remember exactly what day he is, but you'll hear things like that. It looks like it was already built in on the crude, and that's not normally the case. All right, that's it. Enough about crude oil. Going to the Russell now. On the Russell, we had a few trades on the Russell, and we ended up with 16 ticks on the Russell. All right, our first trade was right in here. We got long on this up close above the trend line with the bullish divergence. We took some profit on that, I think 3 or 4 ticks. We got long over here on this up close off the BBC right here. Thanks, Val. We had the bullish cross, tested the BBC with an up close. We got long right there on the up close, and we took some profit there, 4 or 5 ticks. And we got long over here, and I think we took like 8 or 9 ticks on this one. Okay, something like that. We got long here on the up close above the trend line. All right, and we took 8 or 9 ticks. I was going right into a weekly trading zone. This horizontal line here should be at 67. It is a weekly trading zone. Okay. Okay, Robin. Robin will not be able to do the show on Thursday or Friday, and she'll see us on Monday because she's heading out to New York tonight. All right, so I'm sliding the Russell over. Now we'll look at gold. Okay. Let me see. What you guys should take away from this is that I'm doing the same exact thing over and over and over again. On gold, we only had a couple of trades on gold. I think you see them right there. Or a few trades. Was that today or yesterday? Today. On gold, we started off on gold. Yeah, we started off, our first 2 trades on gold were losing trades. All right, there was this nice one right in here that we missed, right here, right at the open. That would have given us our 2 points early on in like 8 minutes instead of 100 minutes. The reason why it took us 101 minutes, whatever it was, to get our 2 points today was because we didn't place a bunch of trades because the markets were a little choppy, and because we lost our first 2 trades. So we were down 17 ticks, I think, after these 2 trades right here. We got long here, we got stopped out. We got short here, we got stopped out. This I think was -9, and this was -8, or one was -8 and one was -9. Anyway, the gold you can see in here was really choppy. There were some opportunities to trade it in there, but we wanted to wait until we started to have some trending on it, like this right here. Okay, this trending right here. Once it finally started to move down and trended down, we had a down close below right here. We took the short. We ended up getting a break even on it. Over here, we got long right in here, and we got back a bunch of the loss right there. I think we had gotten back 8 ticks anyway, something like that. 9 ticks I think we got back on this move right here. And we had a break even right in here. Alright, and that was pretty much all we did on the gold. Alright, since then the gold has been, look at this, more chop in the gold. It's pretty nasty. Not really much to do here on the gold. There was no trade right in here. If you draw the trend line down these tops like this, I guess there was a trade right in there. There was a long trade right there with just a little bit of divergence. But gold was pretty ugly today, and we ended -8 ticks on it. Alright, we didn't take any trades on the NQ. I don't even know if I highlighted any trades on the NQ. Yep, I guess I did. One there and one there. And one there and one there. Alright, so I guess I highlighted a few trades on the NQ when it was moving up. Now, it was pretty bullish today. Everything was pretty bullish on the indexes. When I say that, I mean it wasn't like they moved a lot, but it was pretty bullish. Alright, we had that and that. It was like one directional, but it was really, really slow. And that right in there. And that was it on the NQ. Alright, I had pointed that stuff out. On the ES, there was this one trade here, at 10:10, and that one just lasted all morning. Okay. On natural gas was trending pretty well today. Not sure. This is not natural gas. Copper was trending pretty well today, and I had guys telling me about it, but I wasn't trading it. I didn't have a copper DOM open. But you can see again and again and again, it's the same thing over and over, regardless of what market you're looking at. You're looking for your cross, your pullback test, your up close, bullish divergence. All right. Over here you had your bearish cross. Well, over here you had a trade right here that would have lost. Okay, going to point out the losers too. You would have had a trade right there that lost. Right here you had a bearish cross, tested the BBC with a down close, bearish divergence right there. And I remember on this particular trade, for some reason my cursor is not moving the things around over here. But anyway, on this particular trade right here, I remember telling everybody this was the actual entry right here at 339.20. But the down close of the next bar, the confirmation of the down close of the next bar meant everything was going to be pointing down. That was a great place to enter that trade. All right, and there were many more after it. For some reason, that chart seems to be stuck right now. So I'm going to go to another chart. This is the euro. All right, now I didn't mention much about the euro this morning. There was one trade in here that I really looked at. There was a shorting opportunity here at 10:30. Then you had a bullish cross. It went about 6 or 8 ticks. Then you had a bullish cross, a test of the BBC right here with an up close. You see down here, there was bullish divergence and a blue cycle, so you just needed the up close. That drew down 7 ticks. Now we use an 8-tick stop on every single trade we take. All right, that drew down 7, and then it ran up pretty well. Okay. Okay, hold on a sec. I'll answer that question, Michael. Just give me a second here. All right, that's the euro. That's the ES. That's the NQ. That's the picture. That's the soybeans. That was the copper, gold, the Russell, and the crude oil. All right, here's a question. With all the different futures I'm trading, how many at one time do I trade and keep track of, and what size account would one need to trade these different contracts at the same time? All right, well, there's a couple of pieces to that. One is I trade all of them. Well, I identify trades on all of them. I can only trade 5 at a time because I only have 5 DOMs open at a time. So I only trade 5 at a time. Usually in a single day I'll trade 4 markets. You'll see me actually placing trades on 4, but I usually have 5 DOMs open. Okay. If we look at my spreadsheet, you can see on most days I'm trading 4 markets. Okay. Some days I'll trade 5. But you don't see too many days where I'm trading 5 markets. Most days I'm trading 4 at a time. Okay. Back here, there were some days back here, I reformatted my spreadsheet starting with the month of April because all these were all crunched into one, and I thought I would break them out on this side. Some days I'll trade more than 5 markets, but usually it won't be more than 5. If I trade more than 5, that means I have to close the DOM and open another one up, and sometimes I'll do that. Usually I'll trade 4 markets at a time. I have them all running, and I identify trades on them all, but I can't actually place trades on them all because I can only have 5 DOMs open at a time, unless I have more than one account open, and then I can have 10 DOMs open. Now, sure, Frank. Just remind me tomorrow morning. Now, the other part of your question, what size account would one need to trade all of these at the same time? Well, I don't think you mean put a trade on every single market all at once. Because if you do mean that, then you would need the equivalent of the sum of the intraday margins for all the markets. Okay, the equivalent of the sum of the initial margin is what you would need for all the markets. Not the total initial margin. Depends which markets it is. Now I've really confused you, I'm sure. But what I mean is gold right now, I think it might still be at 100% margins. I'm not sure, but it might still be at 100% margins. And if it is 100% margin on gold is, I will tell you in just a moment. Metals, let's see, metals, gold, initial $7,040. Usually gold runs at 50%, which would mean you'd need $3,525 to trade gold. All right, that's the highest one that we have. That's the highest one that I trade anyway. Silver is higher than that, but I don't trade silver. The next one is crude oil. You just have to look at the initial margins on these. When there's more volatility, they might bump the margins up, but I trade one contract at a time in the live trading room. Okay, so with the margins, for like the ES, the margins are still at $500. The YM, the NQ margins are $500. Gold, because of the volatility, they bumped it up to full margins, which was 7,000. But they may have dropped it back down. I'm not sure right now. Bert would have to chime in and let me know about that. But for things like crude oil, they're usually 50% margins on crude. The Russell is usually 30% margins on the Russell. So it's 30% of the initial margin. No, that's not true. The question is, so you don't trade more than one futures at the same time. Sometimes I'll have two trades on at once. Today, for a short period today, I had two trades on at once. And one of them stopped out and one of them won. I believe it was gold and the soybeans.
I think what needs to be said to clear up that question
Okay.
from Michael, he said at the beginning, what is the average of contracts you place at any one time? Here's the thing, and I'm talking to Michael in the chat room, not Michael B.
Yes.
But Michael in the chat room who asked the question. The point of what Michael is doing is he's attempting in that 2-hour window of time to show you as many potential trade setups as possible. We're not teaching you how to trade multiple markets at the same time. Our recommendation to you is that you pick one market, maybe two, and then you focus on trading those two. The reason we trade across multiple markets is because that gives us multiple opportunities to show you the exact same trade setup as it comes together, executes, and then we're able to manage that trade either through to its target or to its stop. So again, not teaching you to trade multiple markets at one time, just using the benefit of multiple markets to show you the amount of trade opportunities in one day that you might only find in the course of a week if we were only watching one or two markets. Does that make sense? I don't want anybody to misunderstand that, because that's a real quick way to get yourself in a pickle if you're trying to jump around and do what you see Michael do. Okay, do what he does, but do it on just one market.
Yeah.
And
One,
after you get
maybe
comfortable with that one market, maybe then bump it to two. See, maybe you can watch the S&P and crude, or maybe you can watch the S&P and gold. But you start spreading yourself too thin and trying to watch too many markets, it's too much. It's overkill. And remember, the goal is only to make a couple points a day. That's it. That's all you need. All right, back to you, Michael. I just wanted to clear
Okay.
that up.
Yeah, thanks. Man, something just happened with something here. I don't know if you guys heard that noise in the background. It was awful. But anyway, it went away. Hopefully it's all good. Thanks, Dwayne, for clearing that up. I was having trouble with that. Yeah, I usually don't have trades on in more than two markets at once. Occasionally I'll have three, but I really freak out because it's hard for me to watch three markets and manage risk the way that I do. I'm really aggressive with my risk management, and it's hard to do that with two markets. It's hard to do it with one market if you're not used to it. And doing it with two makes it more complicated, and doing it with three makes it near impossible. So you just need to know the intraday margin for gold is $7,000 right now. That's the most you would need to trade everything that I trade. Okay. John, we ended up We were -8 on gold, +16 on the Russell, +5 on crude, and +6 on soybeans. That's how we ended up in the morning session. No, I think I was pretty much wrapping it up there anyway, wasn't I? When I finished that last question. I think I was. All right. Something was just going on here with my computer. It was making a horrible noise. All right, if anybody else has any questions, you can email us at support@cfrn.net. All right. If you want to become a partner and you don't know how to become a partner, you can email us at cfrn.net and just put partner info in the subject line, and we'll send you off all you need to become a partner. If you're on the free trial right now, you should have something in your inbox. If you were on the free trial yesterday, you should have something in your inbox. If you're on the free trial today and you want to know what it takes, then just send us a quick email. All right. If you have not taken the trial, go to cfrn.net/apply, sign up for the free trial, and we have a partners meeting tomorrow night. Reminder, partners meeting tomorrow night. All right, that's it, guys. I'm going to wrap up the recording here, and okay, Dwayne, I just saw your email about that. I'm going to wrap up the recording here, and we'll head out to Vegas, I guess.